Welcome to the PETI training for providers. This training will explain the main elements of understanding the updates and changes regarding the post-eligibility treatment of income, or PETI. Before we start with PETI, let's visit some of Medicaid's policy on reported changes. Timely reporting and processing of changes will be important factors not only in how far adjustments can be applied, but when they will go into effect. Section L of the Louisiana Medicaid Eligibility Manual outlines some specifics of what must be reported, when it should be reported, and the timeframes given for the changes to take place. Changes in income, household composition, deaths, resources, expenses, lump sum receipts, and admission or discharges from facilities must be reported by the beneficiary, their representative, or facility within 10 days of the change. Enough notice must be given to the beneficiary prior to the change taking place. Advance notice rules dictate LDH must provide 10 days advance notice and appeal rights whenever it intends to change a beneficiary's PLI or coverage. The time frame must expire prior to the action taking place. For these reasons, and to allow for notification by mail, it's a general rule that anything processed after the 15th of the month, the change will happen the first of the month following next month. Anything processed prior to the 15th will take effect the following month. Medicaid has sent out a memo outlining the changes and is conducting this training session to explain the changes in the PLI process, and both will remain available for review. PETI stands for Post-Eligibility Treatment of Income. Currently, patient liability, or PLI, adjustments are made to a patient's liability cost in the month of receipt. This adjustment is completed via a 148 PLI adjustment form by adjusting income and expenses for retroactive months. To become compliant with federal regulations and improve administrative workload, PLI will now be calculated based on the Post-Eligibility Treatment of Income, or PETI, rules. With the PETI modifications, adjustments will now be made for ongoing months instead of retrospective months. This is based on notification rules that allow the beneficiary time to appeal the decision. We will continuously refer to the time frame used to give notification to the beneficiary prior to any action taking place as adverse action rules. PLI calculations will now be projected for 3 months into the future based on the date the change is being processed. When calculating PLI before the adverse action date, the PLI adjustment will be allowed to begin the following month. When calculating PLI after the adverse action date, the PLI adjustment will begin the second month after the current date. The 148 PLI has been used to make adjustments to PLI in the past. Since there will no longer be changes to payments in the past, the 148 PLI is going to be phased out as PETI rules take effect. The 148 PLI will still be used when adjusting PLIs for changes that happen prior to PETI rules taking effect, as well as for any changes reported prior to PETI go live. But as the timely reported change restrictions take place at PETI go live, the 148 PLI form will soon become obsolete. Changes reported in income, such as unearned, earned, and self-employment income, and allowable expenses like Medicare Part A, B, C, D, premium payments, health insurance premiums, and incurred medical expenses such as hearing, vision, and dental can affect when PLI will be calculated based on PETI rules. PETI did not change how income or expenses can affect PLI. The key components of PETI: setting a standard 3-month retro period to capture any change. Income and expense changes reported more than 3 months from the time that they were incurred will no longer be included in PLI calculations and will not result in an adjustment to PLI. System updates were made to capture the date information is reported to the agency. This date will be used to determine how far back an adjustment can be processed. With PETI changes, the reported on date will now determine if we can consider changes to income and expenses for a PLI adjustment. Anything outside the reported on date minus 3 months will not be considered timely and will not be used to adjust an individual's PLI. To reconcile any changes reported timely and project a PLI using advance notice rules, giving beneficiaries the opportunity to appeal any changes in eligibility or liability prior to them taking effect. Following these rules may extend the months changes are able to take effect. For example, assuming PETI rules are in effect, the beneficiary has a current ongoing PLI of $1175. Beneficiary purchases a dental insurance with a monthly premium of $175 effective August 1st. Provider submits insurance documentation to Medicaid October 5th. This is considered timely reporting since it's within 3 months from when the change took place. Depending on when this change is processed, will determine when the change takes place. If Medicaid processes this change on October 10th, the earliest the PLI will be adjusted will be November 1st. Overpayments from August, September, and October will be carried forward to reconcile the November PLI. It's important to note the PLI remains $1175 for August, September, and October. If the analyst processes the change October 25th, the carry forward will still start from August. However, because of advance notice rules, the earliest a change can take effect is December 1st. Overpayments will be carried forward from August, September, October, and November. A general estimate is changes processed after the 15th of the month will not take effect until the month following the next month. Until the change takes effect, the beneficiary's liability does not change. The provider portal was also updated with a new feature to be in line with Louisiana Medicaid Eligibility Determination System, or LAMEDS, PETI additions and updates. When a provider portal user wants to view an individual's monthly PLI calculation, a new feature was added to the tooltip text on the Recipient Information Results screen, or IRS. When you hover on the I icon on the left side of the dollar amount in the monthly PLI column, a new line item will appear within the PLI calculation pop-up to display carry-forward calculations. For a non-PETI individual, the tooltip will not include the carry-forward line item. The new line item titled Carry Forward Calculations, under which users will see the addition of the titled line items as Carry Forward Overpayment, Negative Amounts, and Carry Forward Underpayment, Positive Amounts, which we will discuss in our next section. The provider portal will only display the current PLI month and the previous 5 months of PLI calculations. The PLI summary notice will display 3 projected months. When submitting a 148 PLI form, the provider portal will now update the form to only pull dates that are entered before the PETI go live month of August 2024. Currently, patient liability and eligibility are communicated to enrollees through the decision letter. All patient liability information will be removed from the decision letter and only eligibility information will be included. LAMEDS is now updated to include a patient liability information notice, which allows patient liability and eligibility to be communicated separately. Notices of liability will now display the maximum amount a beneficiary can be charged for the month. The maximum amount owed by the beneficiary for a past or current month will no longer be adjusted. The actual amount owed for the month may be reduced by hospital leave, conversion to a Medicare payment source, discharge, or death, and will be up to the facility to adjust. Partial PLIs will no longer be displayed on notices when beneficiaries admit, leave or return from the hospital, change payment sources, or transfer facilities. After PETI, PLI notices will display the calculations used to determine the PLI for the month reported. While most fields like gross income, expenses, and deductions are familiar, new terms like carry forward, overpayment, and underpayment are also shown. Since Medicaid rules no longer allow any past adjustment of PLI, Reconciliation of changes in PLI will be carried forward to a future month. This reconciliation includes both overpayments and underpayments. So, a carry forwarded overpayment would be the amount we will subtract from a future liability if it is reported or we find that your income decreases or expenses increase. A carry forwarded underpayment is the amount we will add to a future liability if it is reported or we find that the beneficiary's income increases or expenses decrease. Future months' PLI will be increased or decreased based on actual income and expenses received in the past 3 months from the date the change was reported or discovered by Medicaid, while still allowing the beneficiary sufficient time to appeal the decision by using advance notice rules. Advance notice rules give the beneficiary appropriate appeal rights prior to a change taking effect. The following PLI notices have been created to communicate all patient liability information. Please note, PLI notices are for specific types of assistance, including long-term care spend down, waiver spend down, and adult day health care, and community choice waivers with VP-LTC, so vendor payment of long-term care assistance. Client patient liability summary notices will be sent to clients to communicate any changes to patient liability, long-term care coverage, or facility. Provider patient liability summaries, Office of Aging or OCDD notices will be sent to providers to communicate changes in a client's liability, long-term care coverage, or facility. There are multiple reasons why a PLI notice will be generated. Beneficiaries and providers will receive a notice for all instances of intake. On an individual level, PLI notices will generate under the following circumstances for beneficiaries and providers. An individual who currently receives non-long-term care adds an individual who is approved for long-term care. An individual in a PLI-enabled type of assistance and an individual is added to the case who is approved for LTC coverage. An individual or case with LTC coverage that was closed then reverted to open. An individual or case with LTC coverage was closed, but the individual reapplies and is approved for LTC coverage. Changes in household information can also cause a PLI notice to generate. Listed below are some examples of reported household changes. An individual undergoes intake for long-term care. A 142 medical certification and nursing home information is added with the payment source identified as Medicaid only. In this scenario, beneficiaries and providers would receive the notice. An individual receiving long-term care coverage undergoes a case change that results in the transfer from one facility to another without changing assistance programs. In this scenario, only the provider would receive the notice. An individual receiving long-term care coverage undergoes a case change to change or add a payment source that results in a change or break in PLI. In this scenario, beneficiaries and providers would receive the notice. A PLI notice will generate with reported income changes or changes in the individual's expenses for both beneficiaries and providers. In instances of a case change, a new section stating there has been a change to income and/or expenses will display. Additionally, when a second case change is done in the same day that results in a change in PLI or a change in facility, the PLI notice will be updated with the most recent authorization. This table will display each month of long-term care coverage that was processed. In our example, this notice was generated to reflect the beneficiary's initial start of PLI payments. Note, this section will appear for intake cases, transitions to long-term care, or new vendor payment long-term care segment updates. Patient liability responsibility details. This table will display each month of long-term care coverage as well as the corresponding final adjusted PLI amount for each of the listed months. The final month listed in this table will display as ongoing. Above the patient liability determination, your income, the start and end date will show the benefit period in which the calculation occurred. Our first section, patient liability determination, your income. This table will display all sources of an individual's income to determine the total gross income, which is the monthly income before deductions. This will include Social Security income, other unearned income, earned income, total income, minus any earned income disregards, and any remaining income. To the right, inside the gray arrow, individuals can also see how income is budgeted. Note, when an individual has earned income, the earned income disregard will appear with the remaining income total. Patient liability determination, your deductions. This table will include personal maintenance needs, spousal, child, family member needs, health insurance or non-covered medical expenses, patient liability determination carry forward calculations. This table will include income remaining after deductions, which is the calculated PLI amount for that month. This table will also include carry forward overpayment, carry forward underpayment, an amount that must be paid or patient liability, all of which will be populated from LaMeds. To the right, inside the gray arrow, individuals can also see how carry forward amounts are calculated. Finally, underneath the maximum amount you must pay or patient liability, a numbered footnote will display that gives the recipient definitions of each line item for deductions. Your income. The Social Security field in the Your Income section on pages 2 and 3 of the PLI notice will be updated to include retirement, survivors, and disability insurance, or SDI or Social Security, and supplemental security insurance, SSI or Social Security, in separate fields to represent the way LaMeds uses income to calculate the correct PLI information. Retirement, survivors, and disability insurance, or SDI, information will be populated from the countable unearned income for that benefit month. Supplemental security income, or SSI, information will be populated from the supplemental security income amount for that benefit month. Patient liability determination, your income. This table, located on page 3 of the PLI notice, will include the start and end dates for each authorized month. Social Security income, other unearned income, earned income, total income, minus earned income disregard, and remaining income, all of which will be populated from the PLI calculations details pop-up screen, which analysts review on their end. Patient liability determination, your deductions. This table, located on page 3 of the PLI notice, will include personal maintenance needs, spousal, child, family member needs, health insurance, non-covered medical expenses, and total deductions. Patient liability determination, carry forward calculations. This table, located on page 3 of the PLI notice, will include income remaining after deductions, which is the calculated PLI amount for that month. This table will also include carry forward overpayment, carry forward underpayment, and amount that must be paid, or the patient liability. Within the rights and responsibilities attachment in the client patient liability summary, a fair hearing statement will be present for advance notice cases in English, Spanish, or Vietnamese, stating, if you ask for a fair hearing by the appeal logic date, your benefits will continue until a decision is made by a judge about your case. If the decision about your case is found to be correct, you may have to repay the amount of any benefits you receive that you are not eligible for. The appeal logic date will either be populated with 30 calendar days prior to the closure date, or the closure date depending on when the closure date falls. Maximum amount you will pay displays the highest amount the individual will be required to pay for that month. This amount may be reduced if the beneficiary discharges, goes on hospital leave, changes to a Medicare primary benefit, or passes away. The PLI notice will be sent to the beneficiary and provider at the beginning of every quarter based on the individual's renewal date to inform them of their PLI for the months included in that quarter. Notices will be sent to the beneficiary, provider, and OAS or OCDD via email if email delivery has been indicated as preferential. Notices can also be sent to nursing home providers, group home providers, and support coordinators via fax if fax delivery has been indicated as preferential. Member notices will be generated in English, Spanish, or Vietnamese, depending on the individual's preferred language. Beneficiaries will receive reminder notices displaying the next 3 months of PLI. The notice will not display the current month, but the following 3 months in that quarter. The notice will not show the current month's PLI because we have previously sent a notice with the current month's information. A new section will be included in the provider and OAS OCDD notices when changes to income or expenses are reported in pre-PETI Go Live months. To help providers clarify how the PETI Go Live date will impact the way PLI is calculated and when to use the 148 PLI adjustment process. For example, prior to PETI Go Live, if a change in income or expenses was submitted on July 1st of 2024 for a benefit month of March 1st of 2024, a retroactive adjustment will be completed. After PETI Go Live, if a change in income or resources was submitted on August 1st of 2024 for a benefit month of March 1st of 2024, PETI rules will apply, and carry forward amounts will begin for months within the 3-month look-back period, moving forward with an ongoing adjusted PLI in September, depending on when the analyst completes the request. The provider PLI notice will inform the provider how the PLI amounts were adjusted. On the decision notice, the following added section will display. Attention! Patient liability, PLI, adjustments for months occurring before date fall under the previous policy, which allows PLIs to be adjusted in the past. Resubmit these months using the former 148 PLI process. Months occurring after date are subject to the new policy and should not be resubmitted using the former 148 PLI process. Date is the PETI Go Live date for the individual the notice pertains to. Email notices will be sent to the client, provider, and OAS or OCDD if email delivery has been indicated as preferential. Notices can be sent to the nursing home providers, group home providers, and support coordinators via fax. Client notices can be generated in English, Spanish, or Vietnamese, depending on the individual's language preference. Currently, incurred medical expense or IME denials are manually sent by analysts. A new IME decision notice has been created that will automatically be sent to individuals, providers, and OAS or OCDD providers to inform them of an IME denial. If the IME is not budgeted because it was reported beyond the 3-month lookback period, a notice will not be generated. Take note, when an initial IME is submitted and denied, a PLI notice will not be sent. IME decision notices for individuals will be generated in English, Spanish, or Vietnamese, depending on the individual's language preference. A new section will be included in the provider and OAS OCDD notices when changes to income or expenses are reported in pre-PETI Go Live months to help providers clarify how the PETI Go Live date will impact the way PLI is calculated and when to use the 148 PLI adjustment process. Individual IME decision notice. The IME individual notice will generate for an individual enrolled in a PLI supported plan within the reported IME timeframe for any denied incurred medical expense, such as hearing, dental, and other. The IME decision notices will generate when the IMEs reported for the individual were after the individual's provider coverage begin date. If there are multiple providers during the initial month of the reported IMEs, then the notice will be sent to all necessary providers present for that month. If the provider is LTC, it will generate the IME provider decision notice. If the provider is waiver spin down, LeMeds will generate the IME OAS OCDD provider decision notice. The PETI enhancement will use a pilot go live approach. Providers will be grouped into 3 phases by long-term care management, and each phase group will go live at different times. Group 1 will go live in August 2024 for 10% of long-term care providers. Group 2 will go live in September 2024 for 50% of long-term care and waiver providers. Finally, Group 3 will go live on October 2024 for the remaining providers, at which point all providers will be live with PETI. You should have received a provider memo that informs you which group you are a part of. The following updates will occur for providers who are under PETI rules. Once an individual's case falls under PETI rules, they will remain under PETI. For instance, a transfer from a PETI provider to a non-PETI provider or a non-PETI provider to a PETI provider. While a facility may not be under PETI rules, if a PETI individual moves to a non-PETI facility, that individual will stay under PETI rules. When an individual or case undergoes the renewal process, a PLI notice will be sent to both the beneficiary and the provider. We are now going to take what we have learned about PETI and apply it to a few different scenarios. First, we'll take a look at a scenario that involves timely reported changes. In this scenario, Ms. Wendy Darling submitted a change on December 10th of 2024. Ms. Darling received an increase in her Social Security payments from $1,500 to $1,575 monthly on October 1st of 2024. Changes in income and expenses reported in the past 3 months from the date Medicaid is notified will be considered timely. Timely reported changes will result in a reconciliation period which will carry forward overpayments or underpayments to a future month to be adjusted. In this scenario, a change that happened in October was reported on December 10th. The beneficiary's PLI will not change in the past. So for October, November, and December, the PLI will remain $1,462, which is $1,500 minus their $38. There will be a $75 carry forward for each of the months, October, November, and December. Assuming the change is completed on the date of receipt, the PLI change will be adjusted in January, adding the carry forward of $225 for a total of $1,762, and returning to the normal amount of $1,537 once the carry forward is exhausted. Changes reported timely will result in the most accurate liabilities calculated as quickly as possible. Next, we'll take a look at a scenario that involves untimely reported changes. In this scenario, Mr. William Darcy submitted a change request on December 10th of 2024. Mr. Darcy reported that he had an increase in his Medicare Part A premium back to February 1st of 2024. Changes reported beyond 3 months from their effective date will not result in a change in PLI from the date of the change. Ongoing changes will be reconciled from a maximum look-back period of 3 months from the date the change is reported to Medicaid. In this example, the reported change happened in February and was reported in December. Since this is greater than 3 months from the change, the adjustment will only go back to September. Again, the PLI is not changing in September, but the difference in the PLI for the retro months is being carried forward to a future month when the change is taking place. Changes prior to the look-back period will not be carried forward for reconciliation, so reconciliation will take place from September onward, and no adjustments will be made from February. Unreported changes and untimely reported changes will be reviewed for possible fraud to determine if a change was purposely not reported to the agency. Let's revisit Wendy again for this next scenario. Emily has now reported that Miss Wendy Darling has passed away. Emily reported Miss Darling's death on January 2nd of 2025 before the carry forward could be reconciled. If the beneficiary dies prior to the reconciliation taking place, no change to past PLI will take place. If someone dies or is discharged, no carry forwards will be calculated. The PLI is not calculated past their death month. Lastly, let's take a look at what happens if the beneficiary transfers to another facility. If a beneficiary transfers from a nursing home involved in Phase 1 to another nursing home that isn't involved until Phase 3, any carry forwards will remain with the beneficiary. There would be no changes in when the PLI would be adjusted. The provider will see they are now receiving a new PLI summary notice. Again, if we revisit Emily and Miss Darling's scenario, if Emily had reported on August 5th that a change happened on June 1st, a 148 PLI would have to be submitted for June and July, and after August, PETI rules would apply. We just reviewed a lot of great information pertaining to the upcoming PETI Go Live. Here are some key takeaways to remember as you go through the PETI approach. A maximum PLI will be calculated for all long-term care programs based on PETI rules. PLIs given for past months will not change. Any reported changes will go back a maximum of 3 months from the date reported. Any adjustments will be carried forward to a future month. Overpayments can be deducted from resources only if they can be reconciled. Changes in payment source can change what the beneficiary actually owes. However, only the full month's PLI will be reflected on the notice. Since the purpose of the 148 PLI was to make adjustments to PLI in the past, the notice will become obsolete soon after PETI rules take effect. Eligibility notices and PLI notices will now be separate. PLI notices will generate quarterly, projecting PLI for the next 3 future months, even if no changes are reported. Timely reporting and reconciliation will be important for accurate liability calculation. Thank you for taking the time to learn about the new PETI updates for providers. For additional information or questions, please contact the Long-Term Care Unit Director, Katie Andrepont, at katie.e.andrepont@la.gov or your individual analyst. For additional reference, this information, along with a collective Q&A document, can be found linked to the memo distributed with this training.